Welcome, welcome. And we have unlocked it here. Great. While we wait for people to join, I'd love to have all you chat and just mention which city you're dialing in from, and feel free to share the startup that you're working on or the company that you represent in the comment section on the right. Awesome, great. I see that our audio is working, that's confirmed, and the chat is working as well, so fantastic. Awesome, Vijay. How are you in two places at once, huh? Okay. All right, we're 4 minutes past. Thank you everyone for joining. My name is Saba Karim, and I'm going to be the moderator for today's panel. I am joined here with some fantastic VCs, as you can see here, and I'm going to spotlight them when they're chatting. First up, I'd just like to tell you a little bit about me. So I'm the Global Startup Pipeline Manager at Techstars. My job is to source startups across the world for all of our accelerators. So I had the honor of going through Techstars in 2018. And then since then, we sold the company, and then since then I've been working at Techstars in this role. So great to be here and telling you more about just VC raising capital and what effect COVID has made in general, and then learn from this awesome panel. So first up, I've got Heather. I'd love for you to share a little bit about who you are, what you've done before, and then also let me unmute you, and then anything that Mindshift is all about. So over to you.
Right. Thanks for having me, Saba. I appreciate it, and great to be here today. And hello to everyone all around the world. My name's Heather Henyon. I'm the founding partner of Mindshift Capital. We're a venture fund investing in women-led tech companies. We invest early stage, usually kind of bridge between seed and A. We've done a couple of A rounds and also some seed rounds. It's a new fund. We just did our first closing in February, right before COVID started. So fortunate, I think, for us and our portfolio companies. We've invested now in 7 companies. We're investing globally, so not just in the MENA region. Although I've been living in Dubai for the last 13 years, I'm American originally, and have lived in the region in Lebanon, in Egypt, and Palestine before living in Dubai. So I have a long time affiliation with the region, and I'm also the founder of the Women's Angel Investor Network, WAIN, which is an angel group that is made up of women angel investors investing in women-led seed stage companies in the MENA region. So that WAIN is focused only on MENA. Mindshift is global, and Mindshift, we're investing in 4 different sectors. We invest in food tech, fintech, ed tech, and health tech. And our companies that we've invested in so far are based in the US, in the UAE, in Jordan, Turkey, which is also a Techstars company, Vivu, and in Singapore. Our most recent investment is a food tech company that's cell-based seafood called Shiok Meats, and they just also announced today their closing of their Series A round. So we're excited to be investors in that space, since we see major growth over the coming years. So Saba, I'll stop there just because I don't want to take up all the time, and let me know if there's anything else I should cover.
Oh, that's great. Honestly, it's so amazing to see all you've done. So maybe we'll share your LinkedIn in the comments so people can read more about you as well, and we'll figure out ways to stay connected as well afterwards. So thank you, Heather. Next up, Walid, tell us a little bit about you. And
sure, hi.
Yeah.
Good afternoon, good evening, good morning. My name is Walid Mansour. I have been in the MEVP for the past 10 years. We are a venture capital company that focuses on early stage seed, Series A, Series B investments in the MENA region, across the MENA region. We've invested in Egypt, in GCC, Levant, but also recently more in Turkey and Pakistan. And we intend to stay in the MENA region. We don't have any immediate plans to do anything outside of that geography. It's a big geography. It's an exciting place to be and to start businesses in. And I've been lucky and blessed to be part of this journey for the past 10 years. I have started my career in a different sector, engineering, then consulting, then government, then entrepreneurship for a couple of years, then VC. So we like digital companies, technology digital companies. We're sector agnostic. I think we must have invested in more than 60 companies since we started. We're present in the UAE, headquartered in the UAE, but we also have a presence all over the region. So thank you for your invitation.
Awesome, Walid. Thank you so much for joining. Really appreciate it as well. And then last intro here is Vijay.
Thank you, Saba, and it's such a great pleasure to be here. My name is Vijay Tirathrai, the Managing Director at the Techstars Hub 71 program based here in Abu Dhabi. As you can see from the backdrop, some of you may recognize the Louvre in Abu Dhabi. It's one of the most stunning buildings, I should say, and such beautiful architects that you can find in the museum. A bit background about myself, been an entrepreneur for the most part, having founded several companies in manufacturing, retail, association management, venture capital, property development, mostly in Southeast Asia, Middle East, Europe, as well as the United States. Prior to me joining Techstars about 3 years ago, I was based in Washington, D.C., running the world's largest entrepreneurial organization called the Entrepreneurs Organization, serving scale-ups as a network organization. So I've been involved with entrepreneurship for the last 25 years, either in voluntary capacity or in the form of network organizations, helping them to scale and grow. That something that I find very passionate about, working in helping with peers in growing companies. This is why really I decided to be part of this great organization called Techstars. Not only brings together the spirit of entrepreneurship at its best, but also the angle of investments, which is a topic we'll be talking today. And as much as I've been having invested over 40 companies as an angel, but I'm also learning a lot about investments by the day. So I should pause there, and I want to also just make a quick comment to Walid and Saba. It's been fantastic knowing both of you over the past few years that I've been in Dubai and Abu Dhabi. And thank you for being such great supporters to Techstars and our program, as well as members of the ecosystem, which I've enjoyed, chatting with you. And I'm sure tonight will be no different.
Awesome, thank you, Vijay. So there we have the intros. As for anyone that just joined, we've got Vijay, myself, Walid, and Heather. Feel free to send in questions via the chat on the right. You can send it to everyone or just DM it to me, and then I'll go through and ask a question. If you've ever attended a panel that I've hosted before, I like to keep things moving and keep the questions fresh. So please send what you want to know in. And also, I'm going to ask the panelists only 2 responses per question. So that way we don't go back and forth and we get some new content each time. So, let's hear from Walid and Heather. The biggest question, that we all sort of are wanting to know is, how has venture capital and investments changed since COVID has hit? Like, what do you think is the biggest trend that you've seen, or what's changed or what hasn't changed? So Walid, I'll let you go first on that one.
Sure. The obvious answer is about remote working, distant investing, distant due diligence, being on Zoom. So the big chunk of the day-to-day logistics have disappeared, no travels. So that's one. Two, a lot of firefighting when some companies needed support. Three, in the beginning, there was a bit of uncertainty or panic, etc. But then later on, it was clearly obvious that some opportunities needed to double down on. So there's a shift in an investment thesis. So sectors like education or healthcare now all of a sudden became way more digitally enabled and ready for disruption. As an example, there's a lot of examples we can talk about. And the capital, for those who are fundraising, the capital cycles have been a bit squeezed because between March till July, nothing much has been happening. So I, ran into companies that actually went bust because they didn't have enough cash to go through that period. That was very unfortunate. But then things are cut back a bit to normal. I also saw a bit of change in our part of the world, demand shifts. So what was very hot a few months ago completely evaporated and disappeared. Sectors, speaking of hospitality, travel, etc. But then on the back of that, and because a lot of people have been in financial distress, lost their jobs, lost their income, don't have a positive outlook on the year or the future, change their behaviors. So there's been a demand shift that's obvious in many sectors, and it took us some time to understand and capitalize on. I feel that now, I guess at least where we're sitting in Dubai, that the panic, the first wave, the uncertainty, the financial hit crash has been to a certain extent, not absorbed, but at least it's behind us. And then now people are looking forward to Q4, to next year, to the next opportunity, to how to kind of either invest or build on new opportunities. I guess it's one of those transformational years. There's the end of a cycle, beginning of a new cycle. So we'll see how that play out for the next years or decade to go.
Yeah, awesome, good stuff. Heather, what about from your perspective, from angels and just in VC world too? What did the investment change?
Yeah, no, I agree with everything that Walid says. But I think there are definitely these shifts in the sectoral focus that we're seeing, and I guess because the sectors that we already are looking at have just been massively accelerated. Things that we thought would take kind of 5 to 10 years, especially in the education sector with the schools, the way that they've had to just kind of adjust and adapt has been just much faster than any of us would have expected. So I think on the product service side, things are definitely changing. Demand has changed, and yeah, I think on the investment side, in terms of just capital deployment, at first everyone was looking after their portfolio companies, trying to make sure that they all had enough capital. We did a couple of follow-on rounds with some of our portfolio companies because we knew that they needed more cash during this time. We wanted to extend runway to get them to kind of 24 months, because my view is that there's no such thing as a post-COVID. This is really the new world or the new economy that we're operating in, and some of these sectors and verticals just will never go back to what they used to be. So just adjusting for that and understanding that there's kind of this complete shift in how people do business, not just in venture, but I think generally, from recruitment to hiring to even investment. I mean, being able to do due diligence remotely, even doing things on Zoom calls is a totally different adjustment, especially for us as early stage investors who really are investing in the team and backing the team. Lots of demo days that have been online only instead of in person. But I also think it creates a lot of opportunity because especially when you remove these constraints of time and place, then and the geographic constraints that, you know, a lot of us used to be on the road all the time traveling. So now that's been removed, and it frees up other energy levels and other opportunities that we may not have had access to. You can basically look at companies and deals that you might not have before because it was either too far away or outside of your comfort zone. But now, just given the digitalization of everything around us, it creates opportunities, and in some ways things get done faster because your constraints aren't as strong.
Yeah, agree with that. Vijay, I reckon, you know, from our perspective in that regard, just at Texas, like, I think we saw a pause right when COVID hit, and like, what's going on? And then it's just been like bonkers since then. What would you say, how would you put it in your own words? How's the experience been for accelerators and applications in general since COVID, you know?
So I think, you know, the fundamental change has been that we are running everything virtual today. And as an organization, you know, we're quite accustomed to that climate because we've been doing virtual programs anywhere in the US. And our mentor pool has expanded to be a global makeup as opposed to mostly focused in one city. And the companies that we attract within programs are from all over the world. So we don't, while there is the element of socializing, as well as in-person meetings, that has all disappeared. But for the most part, the program and what it's impacted to do still remains. So that's something that we see a huge change. And there's a bit of adjustment for everyone, both sides, and the EMDs, as well as staff, as well as the companies, the entrepreneurs who join the program, are making those adjustments. But that's it, we are full on doing over 45 programs this year. That's over 400 companies we invest in on a global basis. And our capital deployment is on target. So in fact, we're not slowing down, we're doubling down on our investment plans for this year, 2020 and 2021. Just that the experience will be more virtual. I want to, Sam, if I could just circle back to your earlier question to Walid and Heather, also share a bit of observations, what really changed with regards to you know, raising capital or the shift since COVID. One is we've seen the thematic interest in the companies that we're selecting has heavily skewed towards more e-commerce, logistics, health tech type companies, which is obviously more hotly debated and interest in the marketplace today, more so than companies that where we invested in the start of the year, companies like, say, aviation, travel, hospitality. Those sort of companies that we invested obviously took a hit during you know, March, April, when COVID came around. And then you had some companies which are in the healthcare marketplace benefit from the tailwinds that came. So, so if you ask me today, there is this inherent bias to look for these thematic type companies to invest. The second is, you know, I think we're becoming a bit more selective, where we're asking questions more pronounced in things like revenue, traction, you know, runway, because the fear that the companies may struggle to get a lift with not being able to raise capital along the way. So we are more conscious about companies having the ability to bootstrap, as well as trying to have longer runways before they can launch a company to market, or product to market. And I think the third thing I'd like to comment is clearly what's visible when Demo Day came about is the reality of valuations for some companies, and where starts asking, say, X, the figure seems to have been deflated progressively because VCs and angels were backing off and saying, we're not sure what's happening here. We need time. And companies are in a hurry to close because just to secure a runway, we're willing to compromise on the valuations as well. So this is what we've seen happening. And the last comment, I think, just beyond the investing stage, but more the corporates. And as you know, Techstars, we have over 40, 50 corporate partners globally. And the vast majority of accelerators are corporate accelerators, so we run in partnership with these corporates in areas like fintech, aviation, food, etc. Inevitably, given the global economy and the state it is right now, we already have seen some damage on that front too, where corporates are now withdrawing interest to be investing in early stage companies because they just want to preserve cash flow and capital for their own core activities. And I think this is something that we don't like to talk about, but we should recognize that is happening. And will continue to be an area of concern for both ourselves as Techstars, but also for our companies who are seeking to collaborate with them on an investment stage.
Fantastic. So I've got a question, right, for Walid and Helen. Again, thanks for that, Vijay. Just to talk about the trends. You said it's moving towards everything being done a bit faster. It's going to be more virtual, obviously, and the demand shifts are towards future of work, ed tech, gig economy, I think, healthcare, and also e-commerce. Like, how do you feel about companies that are working in other sectors? Like, should they be worried that there's not as much money coming in anymore? Or do you think that would remain majorly untouched, like sports or blockchain and other such things? So, Walid, what do you think about that?
Yeah, sorry, when I highlighted some of the new kids on the block, I didn't mean that, everybody else will disappear. It's just the obvious COVID has shown certain sectors that haven't been digitized or up to expectations or up to certain realities, and hence we always like to look for new trends, and that was an obvious trend that was handed over. It doesn't mean that other sectors will not come back or innovation stops or digitization stops. So that's one. Two, the acceleration that has happened is in some instances short-lived. So certain things will people will eventually go out and come back to schools and universities, but the impact of this lockdown, let's say, is in some cases changing the business model for some industries, and hence the longer term digitization objectives become more urgent and more real. And it's what I worry more about is the changes in business models as opposed to short-lived behaviors. And so if your overall income is dropping, people would go into productivity plays, and technology usually offers that. But that means also you have to, as an industry, rearrange your pricing, your offering, education or healthcare or great sectors that you have new ways of looking at, or even commerce, right? E-commerce have new ways at looking at this longer term reality or dislocation. Blockchain for me is just a technology enabler, so it has to be applied to specific sectors. That's not a sector on its own. What I'm interested in is seeing its application in specific examples. But I think big takeaway is many sectors are not prepared for that kind of disruption. there's a lot to do when it comes to reinventing business models and reinventing products and upgrading certain products. I don't think you should be afraid of, I think you should, if you were an entrepreneur and you wanted to take a stab at an industry, that's the right time to do it, even if that industry is crowded with solutions. And because now is the time where people would be, consumers and users would be looking at new ways, new fresh products. You have fantastic opportunities to reset certain things. And there is also a opportunity for talent build-up that's global, because now with remote working, it's obvious that you don't need to go through the old pain points of finding an office and building a team. You can literally build a company. And I've actually been involved in a couple now where the teams are fully remote, extremely lean, freelance driven. I had an instance, one company needed to use the support of a data scientist in an AI application. And even they made a deal with a data scientist to pay him not by the hour, but by the formula, by the algorithm. So there's that, that was also interesting. So you have that community where you don't need an office, you don't need travel. All of your budget can go into. So that's also a crazy opportunity, and I've never appreciated how much some of the cloud products out there that are offered for developers and for business owners and also for designers, and some of those products are really, really, really strong. I mean, as if they were built for this moment. It's insane. I haven't really appreciated the depth of that industry. So I guess I pray for that the internet doesn't shut down, because if that happens, that's the end of the world. And that's probably the second risk. But it's insane. I didn't know that it could actually go that far in terms of planning, creating a company. So and I see a lot of questions about fundraising in the chat room and about how to be presented in front of an investor, and whether you still need, whether you can go cold calls or you need a warm intro. I mean, we're in a world where we're barely meeting people, let alone having warm intros, or that's true from a capital raising perspective, becoming a bit harder to get in front of investors who get scale up money. But what's becoming easier is actually to build very fast. And obviously you have to have the right team, the right people know what you're doing. But that's the speed of execution in certain deployment and products is just post-COVID world is going to be insane. And it's going to be much cheaper. It's going to be straight to the point. I go back to this algorithm example. You don't need to get a sophisticated data scientist to track and put them on all you need is just the formula, just get the formula. So I think it's exciting, and I'm looking forward to the next.
If I can jump in there, I think I kind of agree with your observation. In fact, if I can just interject a couple ideas, I think one of the things I'm excited about is there's a lot of legacy businesses. I talk to a lot of CEOs, both in the Middle East and also elsewhere around the world. And a lot of these legacy businesses are trying to go through this digital transformation. And where the advent of technology is coming, but was slow for whatever reason, because they didn't have either the commitment, strategy to make that transformation, are now waking up naked in the middle of the night saying, oh my gosh, what do I do to keep our business alive? Because we cannot operate where we're dependent on physical, premises, location, people, and they have to kind of switch everything to a digital format. And that has given tremendous opportunities to a lot of startups who is quick and agile to be able to be responsible to provide a simple SaaS enterprise solution, software to, let's say, a warehousing facility or food and beverage company. And this is where we are trying to support those companies because it's forcing a lot of legacy business to, you know, transform. The other thing that Walid also touched upon is about, you mentioned about blockchain. Yes, that's just an enabler. Where we see suddenly an interest, a company that we recently invested is called Definer, which is peer-to-peer lending platform for using crypto assets as well as using you know, any type of whether fiat currency assets, but to allow peer-to-peer lending bypassing central banks and traditional systems. That has skyrocketed a lot, only because the mobility of finance has also seen acceleration online. And whilst there's more competitiveness in terms of seeking capital out there, and these are kind of the businesses that really suddenly, which is conceptually as an idea has been around for a long time, but has really pushed hard in mainstream interest because of COVID and,
yeah.
and out there.
No, I love it. We're about time flies when you're having fun. We're about halfway through the session. We've got so many great questions. So I'm going to try and fire through them. But first of all, Heather, you know, I know investments for women is something you're really passionate about. You've been, you know, obviously you are the founder of Wayne. So why don't you tell us a little bit about that? And then also, you know, what trends are you seeing? Are you seeing an increased representation in women as well, in women founders, so and investments to women founders?
Sure. Yeah, thank you. That's a question that I love answering. So yeah, I mean, really the investment in women-led companies is because we see a massive opportunity in the market. So our feeling is that there's a very high percentage of female founders that don't receive funding for many reasons. I mean, one big reason is that a lot of the VCs, the partners are generally all male. So there's just kind of inherent unconscious bias. And that prevents them from, you know, kind of investing in this overlooked market segment. The second one is just that we as women, you know, tend to see the similar trends that some of the female founders do. So we're more focused on kind of being customer centric. We also are often, you know, 80% of the decision makers when it comes to household consumer purchasing. So in the consumer space, it's a strength, I think, to be representative of one of the potential customers for these kinds of products, which is part of why we're focused on the sectors that we're focused on. And so, you know, part of our investment thesis is really that we can generate higher returns than other investors. For the Wayne track record, we've invested in 10 companies in the MENA region in the last 5 years, and we're north of a 3x in terms of returns. So that's pretty good compared to other regional funds. I'm also part of Dubai Angel Investors, where I'm one of the founding members of DAI and was on the board and on the investment committee for a while. I'm part of 2 other angel groups, one in the US and one in Europe. So have been quite involved. I've invested now in over 100 early stage tech companies between the US, Middle East, and Europe. So have been involved in venture now for about 8 years or so. And yeah, we just see this opportunity because less than 5% of capital goes to female founders globally. So it's a challenge that we see in every market, not just in the US, but in the MENA region. In Sweden, only 1% of funding goes to female founders. And this is part of why our thesis is focused on companies where there's at least one female founder who's also on the management team. So it doesn't mean companies that are only women founders, but our gender lens is that there needs to be at least one woman founder. I think to answer the second part of your question, Saba, it's really, you know, my feeling has never been that there's a shortage of women in tech. I think there are actually a fair number of women in tech. In most markets, you see more in certain markets, especially when you look at some of the engineering schools and some of the graduates of those schools. I mean, even in the GCC countries, those graduates actually tend to be more women than men. So the question really is more, I think, around access to capital. Unfortunately, what I see happening during COVID and sort of the virtual world that we live in is that women are becoming increasingly invisible. We're not represented as much as we should be on panels. We're often overlooked or forgotten, and part of it comes back to women's networks and the fact that their business networks and professional networks tend to just not be as strong as men's networks. And then the other reality is that when it comes to the online learning piece, a lot of the women have been unduly tasked with managing that for their kids at home. So, that's created a lot of issues, I know, in corporates and larger organizations like HSBC, where women are just opting out because they can't manage the stress of their jobs, doing it from home, and then also managing their families and some of the social expectations that come along with that. So we've seen that that pattern occurring as well, and even in, I would say, more liberal and families that value kind of equal work between parents and co-parenting. You see the dynamic where the mother is just more involved in her child's education, which has taken on a whole new meaning in this sort of remote learning worlds. So what I would love to see for edtech founders out there are more dashboards, more management tools for parents to be able to use to manage their children's learning processes, both in school, but also all the extracurricular activities that often just would really, there are a couple of companies that we've looked at that are almost like Uber style management tools for after school activities, which I think are really needed right now. And even being able to track the learning outcomes would be another one of my kind of my dreams for for founders to develop, because it's just really difficult when you've got multiple children and you're trying to track all the different requirements that they've got in school, but then also everything outside of school, from chess club to Arabic to piano lessons and all these other things, and trying to understand where they are in terms of their progress. It's one thing if they're sitting behind a screen, but for people who are actively involved in their children's education, it's always this challenge to figure out whether they're just on video games and playing Minecraft or Fortnite or actually learning. So I think, again, this is back to the question around female founders. We actively understand the problems and the challenges that exist in COVID or not, and so therefore we often design solutions to those problems that we can directly benefit from. So kind of real world solutions for real world problems.
I don't know how many of you have been in the same room as I have.
This better be nice, Vijay.
Be careful my words here, but I had a earful from Heather. So how many female founders have you have in your portfolio, and who's your mentor pool, and how many investors representing from the fairer sex? And I have to tell her in specific details, all the statistics we have. Look, we as an organization are trying so hard, and we do a pretty decent job in investing in female-led companies, but still the numbers outweigh, on the male side by all means. But that said, I have to tell you that in my personal experience, there is some cognitive biases that female founders bring that's really positive, and I think in an area particularly to do with products which has a consumer facing, that female founders have a natural intuition in terms of understanding the consumer better and reading the data sets and how to interpret that, and they have the language to be able to both listen well as well as articulate issues much more effectively. And I think also in terms of a sizable team where you have that mix of dynamics with women, huge difference in terms of the group dynamics between co-founders being female. And I'm sure Heather, you can answer that. This is why I'm not saying it's just politically correct or sexy to do that, where you invest in, you must have female founders just to support that segment of the community, but it does bring material change and positive success to the company in the way they integrate. The last comment I want to make is this, that Heather, I have an open invitation to you on this call. In that, in our upcoming screening committee, I'd like to invite you as one of our judge to be on the panel, to be representing the bias that you might have. Great people and entrepreneurs. So I hope you'll accept my invitation.
Yeah, thank you. No, I'm always happy to support however I can. So thank you. I think, yeah, and you guys have been great. I mean, it's unfortunately, it's just an issue we see a lot with accelerators. We're very, I think part of it has been sort of in the pre-COVID days to ask women to give up, 3 months and come and be on site somewhere, and especially if they've got families. And just this is what I hear from a lot of the women founders who we've worked with, that it's just really difficult to do that. But I think now there's this opportunity when so much is being done virtually. Hopefully we'll see more and more representation at accelerators as well. So yeah, thank you, Vijay. I'm happy to be involved. And Vivid was one of our favorite investments. So we met them through Techstars in Dubai. So yeah, we're super psyched to have them in our portfolio. And sorry, Saba, the other thing I just wanted to mention that I somehow forgot, but one of the other reasons that we invest in women is we see them as being more focused on revenue and financial sustainability. They're not necessarily going to be the massive unicorns, the WeWork or Ubers of the world, but in reality, most companies aren't going to be those, especially coming out of emerging markets. So we know from some of the stats out there from VCs like First Round Capital, they looked at the last 10 years of their portfolio and they found that women-led companies outperformed all male teams by 63%. And there are lots of other data points I'm happy to share around that as well. But we know that they generally raise less capital, valuations are generally lower, but they generate higher levels of revenue, which I think is a really important fact during these COVID times when capital is less easily available. And runway is really important.
Thank you. I want to change gears a bit. We're going to do some quick fire questions, one-word answers. Let's get to know you all a little bit. What's your favorite part? What's your favorite thing about the Middle East? What attracted you there? Whether it's Dubai, Abu Dhabi, or somewhere else. Heather, one-word answer.
Sure. One-word answer. The people.
People. Walid?
One word?
Yeah.
Hummus?
Hummus. I love hummus. Vijay?
Next to hummus is the hospitality.
Yeah.
It's amazing. It's just unbelievable, open-hearted, warm people. Just, open their homes.
One word.
Yeah, that's not fair, man.
Yes, but then when you think of the food, I just kind of stop help myself.
Yeah. I like this one-word game. Let's do a bit more of this. What's a one-word thing that founders should be highlighting, Vijay, when they're applying to Techstars? What do you think they should really focus on?
Authenticity.
I missed that. Sorry, say that again.
Authenticity, integrity of the application.
Yeah. So be yourself. Awesome. Walid, what about you? What are the 1 or 2 characteristics that you think are most important for founders when applying or interested to talk to you about your VC?
In one word, I would say the story. The story that they put together.
Yeah. That to me speaks a lot about maybe the why, like why they're building the company and where they want to take it, right? So
humans are storytellers, so
yeah. Love that. Heather?
The team.
The team. Very Techstars style. Our 6 things we look for is team. The progress idea. I love hearing it. So good stuff. Going the other way, so with Heather this time, what are your thoughts on companies that are being created because of COVID? Is that a red flag? Are you worried about that, or is that a good thing because they're showing that this is a need right now? Like, how do you?
Yeah, no, I think, look, being an entrepreneur is all about agility. So I also started a mobile money company, years ago, and it's really about understanding what the market needs and then coming up with the right product and solution for that at that time. And then you've just got to iterate. So if things do shift, and go back to something else, then you just got to be ready to pivot with that change. And we see that all the time in early stage. I mean, it's all about being able to make those changes quickly and not just kind of design one product or one solution that is going to be static for years. So like, for example, one of the companies we invested in, Tara.ai, they're a YC company, but they actually started in Sharjah, the UAE. Two Pakistani founders, Eva Masood and Syed Tarek. They went to the US. They actually started it's an open source product development platform similar to Jira. They were focused more on kind of, I would say, large corporates, Qualcomm, Google, the big guys, the big tech companies. And then once COVID started, they really saw this opportunity to focus on some of the smaller companies. So they've had massive growth and usage. I mean, over 4,000% growth on their platform since COVID. But again, you've just got to be ready to spot the opportunity and make the change quickly. You can't wait because otherwise you become irrelevant.
Yeah. Yeah. Thanks. Walid, question for you from the audience. And it's sort of traditionally GCC investors used to invest more in oil and gas and infrastructure. I don't know if that's a fact or a perception, but as tech VC, are you finding that you need to convince these investors to shift mentality at all?
I think it's technology is a real business opportunity, and investors would follow business opportunities. In the past, it was more traditional sectors, and now it's more digital sectors or tech-enabled sectors. So this is a normal path. I don't think the GCC is to be blamed here alone, right? So a lot of countries around the world has followed the same path.
Yeah. Awesome. Vijay, I had a couple questions here on accelerators. I'll let you tackle them. Let me find this again. So applying to accelerators, wait, where did it go here? Sorry, here it is. What sets Techstars apart from other accelerators?
Look, I think, the obvious difference is that we have a global network that you can tap into. So a company in Dubai or Sharjah might apply to a program in Abu Dhabi, having almost the same experience as a company is applying in London, Boston, or in Seattle. And the reason is that they get access to the pool of mentors, investor community, and are supporting, ecosystem from anywhere. So I think that's one powerful proposition. The second is the fact that we bring together a lot of corporate partners that we have around the world, and those introductions are literally 1 or 2 degrees separation from where you are. And the third is access to capital. It's one of the biggest challenge, I think, for startups. So no doubt, joining an accelerator and you're successful, often maybe less than 2% might be successful. You get the initial funding, but what happens beyond that? Do you have sufficient runway? And this is where I think we've got an excellent track record in supporting these companies. I think over 50% of them raised between 2 and 3 million in the first 12 months post-accelerate. In 2019, the collective community raised within Techstars about $2 billion from seed stage to Series B and so on. So that is a testimony that the ability to raise funds for venture companies is far more achievable in such programs that we have.
Awesome. I've got a question that I want to tackle or answer. It relates to how to reach out to VCs and what the format is like. The way I look at it, and then hopefully Walid and Heather can confirm that or say there's a better approach. But we're looking for lines, right? And each data point or each interaction is a dot, and you're really looking to see if you can connect those dots and tell a story. And so, after this session, if you're like, oh, Techstars feels like a fit, or Mindshift does, or MEVP does, then I think it's about following up and going, hey, I attended this session. I really liked how you spoke about this and that. Can we get a meeting? But obviously, you have to have an alignment with the thesis about the sector, the stage, right? I think Walid said they only do $3 million plus checks. There's no point to reach out if you're looking for $50,000, right? Is my guess. But read the thesis in detail. But that's normally how you do it, by sort of continuing that story. And so then maybe I'll let Heather go first here to answer. Like, does someone have to have a warm intro to meet you, or can they like inquire off your website? And we like some VCs say warm intro only. What's your approach, and how do you feel about the alternative approach?
Yeah, no, I think that's a really good approach. So we definitely take cold calls and cold messages on LinkedIn, and we're trying to I guess be more open than VCs have been traditionally. That's part of our thesis and our approach, I think, as Mindshift. So, but again, it's better if you can connect things. So I think just giving some context, we get a lot of messages where it's clearly just, kind of a MailChimp or like a massive spam. I think that's not the right way. You want to be able to establish that you've actually spent a few minutes looking at our website, understanding who we are. We get approached often by for example, companies that are all male teams, when we're not even it won't even go into our funnel because you don't meet our gender lens criteria. So I think showing and demonstrating that there's some kind of connection, and the founder spent some time doing a couple of minutes of research and diligence to understand why we would be a good fit for them, it really goes a long way. And it's helpful. And if someone writes a message on LinkedIn, we definitely look at everything. So if we don't respond, it might either because the story isn't clear enough, or because there hasn't been that extra sentence of, I heard you speak on the Techstars webinar. I like what you said about this. If there's some context, it really helps. And we're in the process of putting a tool on our website where companies can just apply directly. We haven't done that yet, but that's one of the things that we've been working on. So we should be able to even look at more companies that way. But again, we're looking at 1,000 companies per year, so it's a pretty large pipeline that we've got.
Awesome. That's so good to hear, at least that it's changing and accepting cold emails. I know as a founder, having done it before, sometimes reading that is very demotivating, going, I don't have money and I don't have the network, and it's going to be so hard. So that's awesome.
Yeah.
Well, that puts a lot of pressure on Walid to hopefully say the same. Accept cold introductions.
Look, obviously the best way is the warm introduction. The second best way is a cold call with some context, and then the third way is a spam. But that doesn't change the math. There's a lot of rejections. There's a lot of solicitations that don't just go through for various reasons. So it's a numbers game to a certain extent. However, the best entrepreneurs and the best fundraisers, the best companies actually are the ones that sell their stories before they even go into raise. And it's something I learned over the past years. It's a very important skill set to have. That's why I go back to your story. And on your story, you have many elements. You have your vision, your product, your team, your capabilities, your market, your go-to-market, your expansion, your exit. All of that makes your story. But what's interesting about a strong story is that it sells itself to your customer, to your team, to your talent, to your current investors, to your future investors, to the investors who didn't, take the first meeting on your last round, and now they're, coming back to the tip. So I guess if you're able to build a great story, it's gonna help you get where you need to get. And I'm not talking about the non-credible stories. I'm not saying you should say anything, but articulating a lot of things into a comprehensive story that will make you go from the spam to the cold call to the warm intro it just needs times, and it needs a lot of iterations, but then you have to be patient. But that's the way to do it.
Yeah. Amazing. I think that's a fair approach too. I think the referral or warm intro just strengthens, what someone might think, and gives you another data point. So I appreciate it. Obviously, there's no right or wrong approach in that regard. You just got to figure out what the VC or the managing director is interested in. How do they like to connect? So we have 2 minutes to go. I just sent out a survey. Feel free to fill it out. We just like to always collect feedback whenever we do these types of panels to make sure it's valuable for everyone. It's anonymous, so you won't hurt anyone's feeling, but it looks like a lot of people have learned something today, which is what our goal always is. These amazing VCs are going to come out to spend a lot of time as we prepared for this and wanted to put on a meaningful way to connect with you. So, in the last 2 minutes, I guess I'd just love to let you all have some final thoughts. Any tips you want to give to the founders here on the call? And is there a way to reach out to you? And then any final course of action? So, Walid, go first, Heather, and then Vijay.
Feel free to reach out over LinkedIn or email if you think there is an actionable request, such as, I have this great story and you should be part of it, and it's right up your alley from a stage perspective, etc. So we're happy to do that. We'll be a bit specific about it. And that's that.
Awesome. Thank you, Walid. Heather?
Yeah, definitely reach out. And I guess just closing tips. I know it's not an easy time for most people everywhere, and I just would say hang in there, keep going, breathe, and stay strong, because it's tough. And I know being an entrepreneur is very difficult and can be extremely lonely and isolating, and being virtual makes it probably that much harder. So know that what you're doing matters and there's value, and keep going.
Amazing. So motivating. Lucky last, Vijay, any words of wisdom as we wrap up at the 9 o'clock? 9 o'clock in Denver, anyway.
Well, I'll just double down on what Heather and Walid said, and in one word, really tenacity is what you guys have, and I have a lot of respect for this. And as everyone said, please don't hesitate to reach out. You've got my contact details, LinkedIn. If you just want a piece of advice, we're here to support you as part of the community. And if you're interested to join any of the programs, not just in Abu Dhabi but globally, at Techstars, you can click on the link that I just posted earlier. Get all the information. So, thank you so much for being here with us today.
Thank you.
Thank you all. Have a good rest of your night over there. I'll have a productive day. Thanks again for the awesome talk. Feel free to stay connected with us on LinkedIn, Twitter, and our websites. So, cheers.
Thank you.
Thank you.
Bye.
Bye.
Thank you. Bye-bye.
Bye.